All right, so we're going to wrap up the week with some, I think, a good talk around Bitcoin, the future of what, the monetary system might look like in just a handful of years. And we're going to dive in deep on all that with a good friend of mine, and that, of course, is Mr. Mark Moss. He's going to be on the channel today. My name is Paul Barron. Welcome back into Tech Path. Today, we're going to dive into all things Bitcoin. I do want to thank our sponsor today, that is Bybit. If you guys are looking at being on an exchange and you want to go in there and do some snipe trading or maybe some shorts, whatever it might be, this is one place to take a look. They've got a crypto cup kickoff out there along with some other aspects, but it's also a great place to grab up a bunch of Bitcoin while we're seeing it at what has been some of the suppressed price points in our history, at least, in the near history here. So a good place. Use our link below. You can also do some zero spot trading fees as well over there on Bybit. All right, so we're going to get into it today, talking Bitcoin, and that is with Mr. Mark Moss. Of course, you guys have seen his channel out there, Mark Moss. Great to have you back on the show.
Thanks, Paul. Always a pleasure being here with you.
Excellent. All right, so we've had a chance to have you on the show many times. Usually we're talking in the zone of Bitcoin. And when you look at some of the market pressures that obviously we're facing right now, much of this has been pointed to a couple of key things that obviously have occurred. The big debacles that we've seen with Celsius and Voyager, now the FTX scandal, all this kind of coming into place. I want to jump to this first story. This is could Grayscale, the Bitcoin Trust collapse, be the next black swan event? And whether or not we'll see that actually happen. There's a lot of people that look at this and position GBTC and the trust as really kind of a little bit of an impenetrable facility. And you look at that along with Digital Currency Group, which of course is the connection there, and Genesis. All of this ties together. What is your theory right now, or your knowledge on whether or not this can really affect the market, and especially related to Bitcoin?
Yeah, it's certainly big news, and it certainly grabs a bunch of headlines because it is a big deal, right? So the Grayscale Bitcoin Trust, which has well over 650,000 Bitcoin, which is a massive amount. And so if potentially it were to break down and get dumped on the market, it could have a big adverse effect. So it's a great FUD, as we call it, fear, uncertainty, and doubt headline. But the reality is, I believe it's all hype and really nothing there to it. And so I've had extensive talks with lots of different people who have done lots of research. I've talked to attorneys. I've talked to trust advisors. I've talked to lots of Bitcoin analysts, and I think it's mostly all FUD, and there's really nothing there. So the way that it works is that you have obviously DCG, Digital Currency Group, at the top, and then you have Genesis, and you have the Grayscale Bitcoin Trust. And Genesis is under fire. They're having a tough time. Yeah. As a matter of fact, they've paused withdrawals, and so there is some danger there, and they could potentially go down, and that could potentially cause lots of other ripples throughout the ecosystem. But the Grayscale Bitcoin Trust is a trust. And so whatever happens with Genesis and parent group DCG really has no effect on the trust. The trust is owned by the people that own the shares. And so the reality of them going down is slim to none, in my opinion. Some people say, well, they're going to shut it down. And I would say, well, why would they shut it down? They have a really sweet deal. So they make about 2%, really more, but about 2% in fees. So they're generating over $300 million a year just in fees. So they're not going to be rushing to shut that down. There's no reason they need to shut it down. I don't see a big danger there. I think it's all hype. I think, there's a big discount somewhere in the 45 to 50% range right now. And so the reason why is because it's just not liquid. And so I can't get the Bitcoin out. If I want to sell my share, that's just the going rate. I think people are still buying it. We saw Cathie Wood has continued to add to her position another $1.5 million yesterday. And so she's continuing to add to that. Now, Cathie Wood seemed like a genius, of course, as the tech drawdown happened. Maybe she's not so smart. But she believes, as do a lot of other people, that there's a chance that this goes back to NAV, net asset valuation. Mm-hmm. And so that 50% gap could get closed up. Potentially what we could see, and probably the best option, is you have a big buyer that wants to come buy this out, a sovereign wealth fund, something like that. If you want to get your hands on 600,000 Bitcoin, there's just no other way to do it. And so the potential is someone comes and buys it, it goes back up to NAV. But I think the reality of it going down to zero or crashing is very, very slim to none.
Yeah, I'm in the same camp, and I look at it, from a discount level right now. We've seen 40 now edging into 50% of a discount, which is why Cathie is doing what she's doing. So I would agree with you is that the likelihood of this really taking in kind of south position. I was looking back in the article, it said, and this was actually, even though there is some risk there, I don't think that it's a risk that we would measure normally like what. Now, again, granted, there's a lot of tentacles that roll in from FTX. Obviously, we've seen the pressure on Genesis, but how this plays out in the trust side, I think, is a little bit different.
Some of the
Interestingly
other
enough,
some of the
yeah, go ahead.
unknown risk potentially could be that the trust has its Bitcoin stored at Coinbase.
Right.
And so then
Yep.
there's some FUD coming out there because Coinbase
Sure.
doesn't want to give an address that would allow people to proof the funds, right, or see that they're there on chain. And so they cite security concerns, et cetera. And so that causes concerns. However, Brian Armstrong from Coinbase came out and said, look, we're a publicly traded company.
Yeah.
We're under
Yeah.
massive scrutiny by the SEC. If we didn't have the Bitcoin, that would be the biggest fraud case in the world. We're all going to prison. We have the Bitcoin, right? And so, again, when there's not transparency, it leads to wild speculation like we see throughout politics all the time. But I think, again, it's not a zero chance, but it's close to that.
Yeah, yeah. I know what you're talking about in reference to CZ's deleted tweet about his little challenge toward Coinbase and that kind of scenario. This was interesting to me in the article. It says total crypto market cap now dropping below 800 bill, but data highlights a few reasons why some traders are now bullish. And this is kind of looking at how some traders are actually looking at sentiment that seems counterintuitive to what the markets are now. We track sentiment a lot here on our own power index, and we've seen downtrends. This is actually the lowest that we've seen Bitcoin sentiment in some time. Completely different than dominance, but just in general. And that's because we've seen so much wind being taken out of the market. Do you think there's been so much push down in terms of the market? Because I feel like right now Bitcoin is stronger than ever. Obviously, it's resilience under these conditions, but even the fact that we've seen it dip below 15 or 16 and it bounces right back into the 15 range, it seems to have a problem decoupling from and moving into that 10K, 12K kind of zone that everybody's been pointing to. Do you feel that maybe sentiment now has bottomed out and we might be on a little bit of sideways action before we see an uptrend?
I do. I think that's right. I think we talk about the Bitcoin and crypto ecosystem, but I think really at the end of the day, the global macro picture is in the driver's seat here. And so really, it's Warren Buffett's quote that a rising tide rises all boat. When the tide goes out, you see you swimming naked. And so when the Fed decided to pull the punch bowl away, right, when they decided they announced in November of last year, they're going to start raising rates. And Bitcoin and crypto started selling off almost immediately. The NASDAQ started selling off right after that. So we can see that the Bitcoin crypto ecosystem is very susceptible to the Fed, the interest rates, and the macro picture. Like I said, it sold off even before the NASDAQ and tech did. Of course, then the S&P started selling off in January, and the Fed didn't start raising rates until March. And so we can see how quickly it responds to that. And so what happened is, as the liquidity started drying up, it starts a cascading effect of liquidations, of margin calls. And it happens throughout the entire financial space, not just the crypto space. And of course, this is what led off the entire drawdown, as you've already kind of outlined with Terra Luna and Celsius and that kind of thing, and all the way down to FTX. Now, where are we at in that picture? So you're asking kind of about this bottom scenario. There's unknowns. If Grayscale dumps 600,000 Bitcoin on the market, obviously that would drive it lower. But I think what we saw today out of the Fed is they're saying that most of the Fed board governors now want to pause on raising rates. So that pivot, everyone's been waiting for the pivot. That pivot looks like it's coming. I've been pretty outspoken. I believe what they've projected as for their dot plot map is accurate. Probably by Q1 of next year, they're done. Probably by January. Maybe we have a 50-point raise in December, maybe a 25-point in January, and then they pause. And that would be extremely bullish for tech stocks, for risk assets, and for Bitcoin and crypto specifically. And I think Bitcoin is sniffing that out, right? It moves in advance of these other assets. And so to the point that you made, I agree. It's been viciously defended at this about $16,000 level. It just can't really seem to go below there. So I'm pretty bullish at this point. Now, could it get cheaper? It could, but I think it's a historic buying opportunity at this point.
So, Mark, I have a whole theory on the macro side. We get a chance to interview dozens of macro analysts, and I get a lot of opinions and perceptions as to how the market might move. There's some intriguing elements that are starting to form right now. Obviously, you just mentioned one of them, and that is how Powell really reacts over the next 60 days, which is December and January. Could we see that kind of softening? And this is something back to a point that Alfonso made, Macro Alf, known on Twitter out there, has made. He and I kind of got into it this morning about this kind of scenario that might paint out in early next year, even though he's still pushing into the latter half. True macro guy. But I look at it this way. If we do see a softening, and to your point, Bitcoin seems to sniff these little moves out much better than any other asset, maybe because it's 24/7, 365. But the reality that you start to see is that if we start to see a softening on the Fed, a potential retracement on inflation, how Bitcoin responds to that, I think, is quite possibly different than what the S&P or traditional finance responds to how we are going, because most likely we'll still see, job loss coming in, real estate prices dropping, other credit crunch issues with now $1 trillion in consumer credit. All those things are still going to be piling in on the traditional market, where I think Bitcoin may end up being a nice little flight to safety on this. What are your theories on that? Do we see Bitcoin maybe making its first move?
Yeah, certainly. We know, like I said, it already kind of moved in advance of other risk assets like in the Nasdaq, and so I believe it's already doing that as well, and it will continue to do that. Bloomberg put out a piece of research. Bloomberg Intelligence put out a piece of research a few months ago saying that they believe that Bitcoin could turn into a risk-off asset. And they think it could happen before the end of the year. And so what we're seeing is gold has kind of found a bottom and seems to be starting to catch a bid. We've seen reports from central banks that they've been acquiring more gold than any time in history since the 1971 post-gold standard history. And so gold has seemed to be found a bottom and is catching a bid. It looks like Bitcoin as well. And so I think there's this transition to the point I think that you're making, where Bitcoin starts to transform into more of a risk-off asset, starts to move in advance. And I think if you look at the even bigger macro picture, so instead of just, what's the current situation with the Fed and the punch bowl, right, with the monetary situation, but if you look at even a bigger picture, what we can see is that currencies are falling all over the world right now. So we've seen Peru, Ecuador, we've seen Lebanon, the Turkish lira is plummeting. In Hungary, they're having 50% food inflation, and that's with government enforced price controls. And so there's massive inflation. Why? Because they're losing confidence in the currencies, and so they're ditching the Hungarian currency and they're going to the euro. But when they ditch the euro, where do they go? Probably to the dollar. But when they ditch the dollar, where do they go? We saw today Credit Suisse had an $88 billion run on the bank. And so it's these bigger macro pictures. There was a paper that came out yesterday, I think Michael Saylor shared with a professor from Harvard, that shows that he thinks that the governments, the US basically sanctioning these countries, will push people into Bitcoin. So that's even the bigger macro picture that I think is happening. So yes, I think Bitcoin is sniffing it out. Yes, I think Bitcoin is transitioning into a risk-off asset. And the more the financial system breaks down, Bitcoin will continue to catch a bid.
Yeah, and I think what we're seeing also when you look at, and I think for mostly in large part, the crypto community and the Bitcoin community, two separate communities, and I think that's where a lot of people get kind of confused. I was looking at one of the tweets you put out. It said the great reset of crypto is happening. A lot of confusion in the crypto space. It's a scam, Ponzi. The government should shut it down. Noise is versus where Bitcoin is truly the signal here, not crypto. Which is a problem, because I have to kind of correct people a lot when they find out what I do and all that. And they're saying, oh, yeah, that's crypto. And I'm like, well, Bitcoin is not really crypto, but crypto is another thing. And then, Web3, blockchain, those are other things too. But when you look at how Bitcoin is being really isolated over here as a true commodity, which most likely, for sure, is going to be a CFTC governing body really aligning with that. Maybe a handful of other tokens that might fall into that, Litecoin, a handful of others. When you look at the strength of where Bitcoin is, and now you start to see what, to your point, is a lot of sovereign nations starting to maybe look at some alternatives here. It does open up the opportunity for Bitcoin to really continue this El Salvador stylish move in other developing countries. But in the G20, you're still dealing with the fight that we're dealing with right now, which is the digital dollar. these digital dollar tests. You look at Japan, you look at New York with the Fed. How do you think those, at some point, do you think we kind of run into a little bit of a bumper car situation where we're going to be going head to head with these digital dollars?
I don't think so. I don't see it as that big of a risk like most people do. And so what do I mean by that? I think ultimately the government, I mean, on one hand, yes, they want to kind of seal off the exit, so to speak, right? Take away the lifeboats and keep us in, which is probably why you see gold being suppressed and things like that. But as far as the digital dollar, it's coming. But the reality is we already have it. Over 80% of all transactions are already done digitally anyway, right? And so we're already using debit cards, credit cards, things like that. So whether they do something on the back end to transition from what we traditionally known as just a digital dollar or ledger to more of a central bank digital currency doesn't really affect things that much. But I actually think that they'll be bullish for Bitcoin. And the reason why they're going to be bullish is because there's still some people, mostly the older generations, that think, well, I can't trust this virtual, this magic internet money. I can't hold it. It's not tangible. And so once we start getting more used to a government-backed digital dollar, so to speak, the other people, it will start to legitimize these kind of digital currencies. And then people will start to go, well, wait a minute, why does my digital dollar continue to buy me less and less goods and services, but Bitcoin seems to buy me more goods and services? And then, you start adding in the central bank digital currency stuff with the, behavioral modifications and this, programmable situation they could put into it. And then you'll have Bitcoin over here that's censorship resistant, immutable, et cetera. And I think it's really going to illustrate the difference, which will eventually push more people into Bitcoin.
I'm in agreement with you. I still am worried that there will be, it's kind of one of those scenarios where you kind of look at Bitcoin in somewhat, if you're a financial analyst or, a creator of some of these systems within these digital, financial, monetary setups, you kind of look at what's happening with Bitcoin and wonder how would you necessarily keep people from migrating almost 100% to that, especially if we get into programmable money. Because to me, that will most likely.
Let's play that out just for a second. Let's play that out for a second, right? Okay, so we have the US dollar. All right. Now, money should have multiple attributes, but really you think of money as one, a store of value, two, a medium of exchange, and three, a unit of account. All right. Nobody believes the US dollar is a good store of value today.
Yeah.
Right? No one's storing their wealth in dollars. Ray Dalio says cash is trash. Now he's starting to come back off that a little bit. But for the most part, that's why real estate has got this monetary premium. Stocks have this monetary premium, bonds, private equity, et cetera. Nobody wants to store their wealth in dollars. We put our wealth into assets. And so if we can put it into oil contracts, or we can put it into gold or silver, or we can put it into equity stocks, Facebook, Meta, Google, et cetera, or I can buy real estate, things like that. Those are all places that we go to store our value. The dollar is a medium of exchange and a unit of account. Now, so when we think about it in terms like that, so if I was the CFTC or the Federal Reserve for that matter, which by the way, the Federal Reserve doesn't make laws, okay? So the Federal Reserve has no control over the laws. The Congress makes the laws, right? But in that regard, if the Federal Reserve or the Congress, whoever goes, well, wait a minute, people are storing their wealth in Bitcoin. Yeah. And they store it in real estate too. Are they going to shut real estate down? Well, they store it in futures contracts for oil. Are they going to shut oil down? So it's like we already use other things to store our value. And I don't know if they're that worried about people storing their value in Bitcoin because they're not going to take away all our stores of value, right?
Yeah, I think that I agree for sure. But when you look at kind of the future of where monetary systems are going to align, at some point, these systems, especially when I look at Bitcoin, the use case scenario for it is very positive in the sense of let's transact with it. Likelihood of more companies moving into it. We're going to see a lot more individuals that will go peer-to-peer. Obviously, that especially as we start to see digital currency and Bitcoin take up in terms of adoption percentages. And I think that's the interesting thing to me. I was looking at here's one article, Japan Central Bank now issuing the digital yen. So we already have the digital yuan. Now we got the digital yen coming at us. And then you further on, you got the New York Fed. Again, as I mentioned earlier, this is the CBDC pilot they're doing with some major banks. And again, a lot of plays right now with traditional finance. You've got Fidelity jumping in. You've got JP Morgan saying, hey, maybe this is going to work out. We've got some things that could happen here. all of this is pointing to me that at some point that digital currency is going to happen in the space. We'll see fiat go away in the known, possibly in our lifetime, maybe in the next 30, 40 years. But when you really see the potential and power of Bitcoin, I would agree with you. I think the opportunity is unmatched right now. When I look at fiat in the short term, I look at it in a scenario of when we see volatile stakes that are happening today, like what we see with Bitcoin and other assets, digital assets, very, very volatile. Sure, yes, you can convert to cash, maybe get 3 to 4% on some of these high yields, and then rip right back to Bitcoin when you're ready to buy in and grab, whether it's that dip or your dollar cost average target has been met. That's kind of the thing that at least I'm doing personally. Obviously, not financial advice, but something that we do here, and we're watching for those little credible opportunities to say, all right, that's a Bitcoin entry, that's a Bitcoin entry. And we're kind of just continuing to stack our sats based on those kind of monetary, linchpin scenarios that kind of get pushed in from the macro side of things as this all goes forward. When do you think Bitcoin decouples from traditional finance, especially the stock market?
So I think it's a process, not an event, right? So we're witnessing it happening. Right now, we can see that it does have a strong correlation with the tech stocks, specifically the Nasdaq. However, it's been going down. So we had a 90% correlation, an 85% correlation. Now we're below an 80% correlation, and so it's a process. Like I said, I already referenced the Bloomberg Intelligence report showing that they believe it will move into a risk-off asset. So that's when it will start to decouple. But I believe it happens over time. So if we look back through history, we can see the dollar took over the reserve standard of the world from the pound sterling. It was about a 40-year process that happened in. And of course, the pound sterling is still around today, 100 years later. And so it happens over a long period of time. I believe it's already happening. I sort of agree with Bloomberg Intelligence. I don't know about the exact timing, but I believe we're starting to see it. And I believe over the next 6 to 12 months, Bitcoin will really start to move more into the risk-off asset area, and then we'll continue to decouple. Now, we know that it's been sort of like this Wall Street trading toy, right? They love to trade it. It's extremely volatile, less correlation. But we know that it's not that. Well, we know, you and I know, most people that have studied Bitcoin know that. And what we can see is that in other parts of the world, they know that as well. So in Africa, for example, 80% of all Bitcoin transactions under $1,000 value are being done in Africa.
Yeah.
They're using it, right?
Yeah.
They're using it in El Salvador. They're actually using it, not just trading it on Wall Street. So the decoupling is beginning. It's a process. I believe it will continue to accelerate over the next 6 to 12 months. And I believe by the end of the decade, it'll be full transition.
Yeah, and I think that lines up with what Cathie Wood, whether she's right or wrong, I mean, she's parring out Bitcoin at $1 million by 2030. Even though I'm a Bitcoin, I wouldn't call myself a maxi, but I'm a huge Bitcoin bull in the sense of saying, yeah, we're going to see some multiple X's here, obviously in terms of value, mainly because of the transitionary aspect of the monetary system as a whole. And just in general, the demographic shift that is starting to occur, obviously here in the United States, but more importantly, globally, where we'll start to get a lot more youthful thought around digital currencies, and Bitcoin's going to be right there at the top of the heap. I was looking at this report right here by Coinbase, and they one thing that stuck out was this, this long-term perspective that they were hitting on. But looking at 58% of investors now expect increasing their allocations over the next 3 years. And a majority of investors, 59%, are currently using or planning to use in a buy and hold approach. So I feel like that is where we're at right now with Bitcoin and why it's been able to hold such a really stalwart position. Not necessarily stable, but definitely isn't moving erratically right now. And a lot of it kind of leans into what a lot of these reports are kind of pointing to. Even though Cathie Wood, we played a clip earlier this morning. Cathie Wood saying, "Hey, listen, it might delay institutions by just a minute, but really the opportunity here is just too great. At some point, we're going to start seeing them move in." What do you make of these quick moves by Fidelity? I don't necessarily like Fidelity's angle because they don't let you move your Bitcoin around, but the fact that they're actually opening up to Bitcoin and this is now going to launch next year. What are your thoughts on this? Do you think we're going to see a lot of dominoes coming into the space?
Well, Fidelity is no stranger to Bitcoin. As a matter of fact, I believe they
Yeah.
were the first big institution that had that jumped into Bitcoin and doing
Mhm.
Bitcoin mining. I think all the way back to 2015, for sure 2017. I forget exactly, but I would say in regards to that, as well as Kathy Wood's argument or comment about $1 million Bitcoin by 2030, I think there's two things that are at play here. So one, to the point that you made about more people adopting it, the institutions adopting it, et cetera. But you also have to look at the dollar.
Yeah.
And so, what I believe is going to happen is that the dollar will continue to lose purchasing power. And so,
Mhm.
when Bitcoin trades for $1 million per Bitcoin, the dollar doesn't buy very much.
Yeah.
So, in
Yeah.
Zimbabwe, everybody became a billionaire, but it was 350 billion to buy one single egg. And so, what
Right.
I believe comes next is right now the markets are going down because the Fed is holding back the monetary stimulus. When they are forced to pivot over the next 24 months, people are going to wish they weren't. And I believe that prices will start going up so fast. The problem will be, how do we keep our head above water? And so we
Right.
saw, in 2008, it was a $700 billion TARP bailout, ended up being about $1.5 trillion. We saw in 2020, if you add up the Fed and the government monetary and fiscal stimulus, we were about 11 trillion. The next one's going to be 25 or 30 trillion. And it's going to blow this thing wide open. And so $1 million isn't going to be what you think $1 million is today. So I think keep that in perspective. But as far as the institutions, I think there's a couple other things at play there. And one is that, to the point that you've already kind of made, the SEC, both the Clayton, who was the head before, and now Gary
Mhm.
Gensler, both Clayton said Bitcoin is a commodity. Gary Gensler has come out and said Bitcoin is the only one that's a commodity. He said the other ones, it's said to be seen. He doesn't want to say about it yet. We did see this case come out on Library a couple of weeks ago, where basically they said, "Hey, no, we're a utility token," and the SEC or the judge is like, "No, there's no argument there. It's certainly not." And then the founder of Library said, "Hey, this sets a dangerous precedent for everything, including Ethereum." And so I think we're seeing these institutions moving into something that's clearly regulated as a commodity.
Mhm.
There's a clear path for them to do this. Fidelity has been pioneering it. We're seeing all the big institutions jumping in, but without regulatory guidance, well, I think the regulatory guidance is pretty clear. Gary Gensler said the top 5 exchanges, which control over 99% of the trading, need to register as securities exchanges. That's what he said. And so
Yeah.
I think these institutions have attorneys that know this enough. Bitcoin is clear. It's a clear path for them. They're moving in heavy. I don't think we need them, but I think they'll come. Like I probably agree with Kathy Wood. Maybe it's a small hiccup, but it's not going to slow them down.
Yeah. Yeah. I would agree. Here was JP Morgan coming in and registering a trademark for a new cryptocurrency wallet. This is going to be interesting because if you look at how a lot of these financial institutions are trying to secure and really kind of get into a position, most of it is marketing to a certain extent. It's talking about trying to keep people's money there, figuring out ways to kind of create, new instruments there, including crypto instruments and Bitcoin instruments that keep people in that ecosystem before they start jumping off into self-custody and doing other things. This is a poll I brought up the other day, and I asked, with all of what's happening, and if we do see some sort of scenario from a monetary position start to put some pressure on Bitcoin, which one of these things would run into a challenge? Self-custody, could it be harder? Could it be a scenario where maybe they just don't allow you to self-custody in any of these major financial institutions? I know you're a futurist and you look out way out in the horizon. How do you see banks pulling onto this in the future? Do you think that where are we going to be buying our Bitcoin 5 years from today? Are we still going to pull up to an exchange, buy it there? Are we going to grab it from a bank? What are your thoughts on this?
Well, if you think about the functions of a bank, right? A bank allows me to store my money there instead of burying my cash under my mattress or my gold in my backyard. I can give it to a bank so I can store my money, and then they facilitate payments inbound and outbound.
Yeah.
They also provide loans. Okay, so that's really 4 functions of a bank. Well, with Bitcoin, I can store it on my own cryptographically, and I can
Yeah.
handle my own payments in and outbound. So
Mhm.
what do we really need the bank for? Now, there's
Yeah.
the loan aspect, but of course we've seen there's peer-to-peer loan markets that have been around forever, and of course all these other things that could pop up there. So really, the 3 main functions, the storage and the payment application, we don't really need them for. So I think ultimately, banks as we know them start to lose a lot of relevance.
Mhm.
Maybe they don't realize this yet, and so I kind of laugh when I see PayPal and PayPal bringing in, or the banks bringing in Bitcoin, where it's almost like bringing this Trojan horse in, where it's like you're going to help push adoption, but you don't really understand that it's there to put you out, right? But I do think it's a good move for the banks. They understand that banking is very sticky.
Mhm.
When I opened up my very first banking account, I'm not sure how old I was, 17, 18 years old probably. It was with Wells Fargo. Wells Fargo has come out to be like the biggest fraudulent bank, right? Of all these fake accounts, they paid out the largest fine in history,
Yeah.
but I still bank there, right? Like moving your bank is difficult. It's very difficult to close an account, set up other accounts. So it's what we call
Yeah.
sticky. And so I think the banks realize this. And so what they're seeing is that all these people are moving accounts to Coinbase and things like that, Kraken, Gemini. And they realize, like, shoot, now that these crypto banks, Kraken or whatever, are starting to offer banking services,
Yeah.
if people leave to go there, we may not get them back. So
Yeah.
our only hope is, if you can't beat them, join them, so to speak. And so I guess we should start offering these Bitcoin services inside the banking account. We've seen US Bank, which is a top 5 bank, has already started offering that. And so I think that's a trend that will definitely continue. It's their only hope to stay relevant. But I think you said 5 years out. I think in 5 years, we'll start to see that shift. Within 10 years, the shift is going to be well underway.
Yeah. That's the kind of the horizon I'm looking at, is by 2030. That's where I think we start to really see kind of a shift in the landscape of our financial institutions. The neobanks, I think, will start to, if you look at what Revolut's doing in Europe, there's a handful of those style of internet version banks here. Mercury Bank now getting into startups, doing a lot more of that. That was a very interesting thing. I had a chance to interview those guys, not here recently, and I was intrigued with the way that they were going about it, complete online, but really a crypto forward bank. So they're starting to integrate, crypto payments, all those kind of things for e-commerce and tool sets, which I think is really the uniqueness that the industry is yet to see. We're still seeing a lot of this pushback, kind of that then they fight you moment, which is kind of where we're at right now. But I think we're getting ready to trickle through that, whether it's through regulation and issues with FTX and all that. But a lot happening for sure. I want to ask you a couple of predictions, not putting you on the spot,
Yep.
but if you look at
Sure.
2023, you
Yeah.
talk about this all the time. So this is like a softball to you. 2023, if you picked out 2 things that were going to occur in 2023, this year it was failures. In 2023, what do you think we're going to see in the world of Bitcoin in general and crypto as a whole?
So I think in 2023, the Fed is going to be forced to pivot. I think they're going to break things. They already are. They've gone too far too fast. It takes about 6 months to really see the ramifications of these rate increases kind of come through the economy, and so we're already starting to see the leading indicators of that. And I think things are going to break. I would say probably before Q2 of next year, 2023 is over. The Fed is going to be forced to pivot. The Fed doesn't care about your stock accounts. They don't care about your house. They can crash and burn. As a matter of fact, they want them to. They're trying to crush the demand. But we're seeing the liquidity in the treasury markets drying up, and it's really dangerous. We're seeing currencies around the world starting to crash. We're seeing the UN pressure the Fed to come off of that. So I think they pivot, which is going to push risk assets higher. And I think all risk assets, including Bitcoin and crypto assets, will benefit from that. I think, and this is a prediction that maybe a lot of people aren't going to like, I think that we're also going to see some serious regulations come down the pipe in cryptocurrency. And when that happens, I have a video coming out tomorrow that I'm predicting there will not be another crypto bull run. And the reason why I say that is because I believe that this is a whole different conversation, but I believe that the regulations are going to come in on these crypto assets, and most of them won't be able to do this. And people are like, Mark, you're an idiot. They're just going to go offshore. Yeah, they certainly will. But if you understand how the crypto market works, it's driven by US-based venture capitalists. They love the liquidity in these token sales. So they buy the tokens, they can dump them with instant liquidity. We've seen videos of like Chamath laughing about this online. And so if the US comes in and regulates these things as securities, then they go offshore, but the US venture capitalists won't be able to go. So I think that's going to happen. And I think that's going to be extremely bullish for Bitcoin, because basically you have 1,000, 5,000, 10,000, now 20,000 crypto assets that pull money away from Bitcoin. And if most of them go away because of security regulations, I'm not saying all of them will, but if most of them go away because of that, then a lot of that money would go back to Bitcoin. And so those might be my big predictions. The Fed pivots. Inflation rages, blows risk assets high. Bitcoin goes high. More regulations come into space, and majority of crypto sort of goes away because they won't be able to pass that high bar of securities.
Well, we've talked about this on the show quite a bit in reference to the regulatory and framework and environment. If that takes 23 or 24 to do it, really in this next, from post midterm, even though I know there will be a lot of gridlock now that we've got the GOP and the Dems kind of going head to head, but the likelihood of getting some sort of bipartisan movement, I think, is real. And I would agree with you. I do agree
I don't know if we need it. I don't know if we need it, right? Because
for regulation.
Yeah, I mean, we already have regulations. So the SEC doesn't really pass laws; they just enforce them, right? So Congress needs to come and do that. But we already have securities laws, and now we're starting to get precedent. So this library case, I believe, was really big. They said it sets precedents even for Ethereum. But this Ripple case, is going to be really big, and they're saying that should be decided by Q2 of next year. And so that is going to be very telling for what happens next with the cryptocurrency space. If they get deemed a security, I mean, that's going to be really, really big. And if they are deemed not a security, it could be really, really big either way. Yeah. So I think all eyes are on that. And regardless of what happens with gridlock in Congress, I think that is probably going to blow things wide open one way or another.
Yeah, for sure. Good ones. I want to just reference a chart real quick. I want your opinion on this because I've asked this question to a couple of analysts, and I'd love your look at it. I know you follow history a lot around market cycles and things of that nature. This is from Alessio Rastani. He's I'll just show you guys who he is. Yeah. He's a chart analyst, leadingtrader.com. Anyway, I've been following him for a little bit, but he has this theory about how the Fed pivots and that there's actually downturn in the market. Now, granted, this isn't Bitcoin. This is the S&P, which to me often potentially means that we're going to see a flight to Bitcoin as an alternative asset. What do you think about this, where we see a pivot and then a pretty significant downturn immediately after that pivot when it is recorded as the pivot? If you look at 2007, 2019, these little dips, 58%, 35%, these are S&P numbers. What are your thoughts?
Yeah, little dips, little dips. Yeah, I mean, it's not just his opinion or research. I mean, it's fact, right? It's history. Yeah. And so to your point, whenever the Fed pivots is typically bearish for the markets. But I think a lot of it is causation versus correlation. And so what I mean by that is that the Fed is pivoting because things are breaking. And so they pivot, but like things are already in motion to that point. Yeah. And so I think a little bit of it is that, but to the point that he's made in that chart shows, typically right now things have been going good, so the Fed starts to tighten. Then they tighten too much and they break something, and so they pivot. But the pivot is being done a little bit too late, and so the market is already going to trend down after that. And so I think that's happening. I think to the point that I've kind of already made, I believe that chart will probably play out as well. And so they have been tightening, and these leading indicators that we're seeing right now are showing us that things are about to get really bad. Now they're starting to already pivot, right? So they've already said, hey, we're probably not going to tighten as much.
Softening.
We're probably going to we're going to soften, if you will, right? They'll probably pause by January. So I don't know exactly what you'd consider a pivot, but at least stopping is probably a pivot. But we're not going to see the effects of those rate increases for several months. So that's going to continue to get worse. And so I believe that chart will play out. And then it's going to get so bad that they're going to be forced to jump back in. And I think the Fed that was obviously a long historical chart, but I think the Fed is in a different position today than they were in the past. And we see really what happened in 2020. And they don't want to sit around and wait. They want to kind of drive it. And so I think we'll see another 2020 kind of move where they break it so hard and so fast that they're forced to pivot so hard and so fast. And so I expect that chart to play out again, but in a very short time frame, similar to 2020.
Very interesting. Very cool. Let's jump to the poll today. We're going to take a look at what the audience has to say about this. All right. So would you say JP Morgan, this is looking at people storing their Bitcoin, JP Morgan to store. So no self-custody only. That's good. This is great. That does my heart good to see people saying self-custody is the way. See, we've got some smart people out there watching. They're paying attention to what's happening. That is a great thing right now. Now, the key here is you need to educate others. Go out, help others understand what self-custody is, help others understand how to make these kinds of moves, because I think those are going to be important coming soon. Mark, always great having you on. Have a very happy Thanksgiving out there. Happy holidays to you and your family.
Thanks, Paul. Appreciate it. Good chatting with you.
All right. All right, you guys are tuned in over on the podcast side of things. Jump over here to the YouTube channel. This is where it all happens. Get into the Diamond Circle as well. It's a free service that we offer. That's an email. It's easy to get to, all that good stuff. And make sure and visit our new website, which is pbn3.com. You'll get a chance to go over there. We navigate this. This is going to be in the process of building a little bit. You'll get to our asset, all of our shows, content. You can kind of break down in the big topics that we cover, crypto, Web3, and investing. Also visiting all of our shows over there if you want to start breaking down into the individual shows themselves. Get to the power index. Also learn some ways to jump over into the membership side. Now, the membership site is still and will be operational, so they're going to be kind of working in tandem together. We'll continue to kind of educate you guys on how that works, but it's very easy. But it's where you can kind of get into everything from the power index to the Diamond Circle, which is our free service, by just clicking the link below. And of course, you guys have a great holiday out there. If you want to catch me, it's on Twitter @Paul Barron. We'll catch you next time right here on TechPath.